Strikes raising new fears about shipping security around and in the Strait of Hormuz and the Persian Gulf. The Trump administration has already proposed a $20 billion insurance backstop to help restore shipping through the key oil route, but the Iranians are threatening any tanker that moves through the route. Joining me now is Bolvin Wealth Management Group President Gina Bolvin. Gina, good to see you. Thank you for weighing in here. We've got supply shocks from the Iran conflict. They've been roiling energy markets, as you know, and oil now is above 91. How do you invest in this scenario?
Hi, good morning, Maria. Well, it certainly is a headline-driven market. And I'm not making any changes to our portfolios based on what's going on. Our base case is still that there's going to be a swift resolution, and so we're not making any changes. It's very similar to what we saw in 2022 when Russia invaded Ukraine. We're seeing a stock market price pattern. We also saw then that oil hit $120 and the market went down 8%, and 30 days later it recovered. So we're hopeful, and we still do expect a swift resolution. But Cheryl covered it. This is not the 1970s, and the U.S. is more energy efficient and more energy independent, and the U.S. is a net energy exporter. That being said, the price of oil staying at $100 a barrel for an extended period of time could be a problem, but that's not our base case right now.
What kind of a problem, Gina?
Well, it could eat into economic growth, and again, that's not our base case. In fact, I think, Maria, the market has been surprisingly stable. The market, as measured by the S&P, is only down about 3.5% or 4% from the peak, and it's only down about 1%. For the year to date. And I'm very much encouraged by what happened on Monday when oil hit $120. WTI has been in a trading range, but when we saw oil spike on Monday, the market went down 1.5%, but it finished up about 0.8%. And we're seeing some encouraging technicals in terms of market breadth is strong. When we look at technology, it has been holding up really well. When you look at the XLK, which is the index of technology, it's staying above its 200 daily moving average. The VIX, it spiked to 30, but then it came back down. And that's encouraging because when we see this type of move in the VIX, which is the fear index, generally 30 days out, 6 months out, we see strong returns. So the market has really held in there.
Yeah, for sure. Markets facing multiple shocks at once. Even with all of that said, the Dow down better than 3%. The S&P 500 and NASDAQ coming under pressure since the beginning of this Iran conflict. But beyond geopolitics, investors are concerned about cracks emerging in the private credit market as well. Got the KBW Bank Index down better than 11% just in the last month, Gina. Several major firms now limiting withdrawals from private credit funds, as you know, including Morgan Stanley and BlackRock, after a surge in investor redemption requests. Blue Owl down better than 40% in 3 months. Short sellers are increasing bets against that company after it disclosed about $48 million of exposure to a collapsed UK property lender. Blackstone and KKR down better than 30% on liquidity and valuation concerns in that period. So what are your thoughts about these worries around private credit as well?
Maria, we haven't been invested in private credit, and when we look at the financial services sector, I like more of the big banks. They've been coming under pressure too, but I do think that there's some opportunity in more of the wealth management space. We think that there's a pretty good pipeline for M&A. That being said, our favorite sectors right now, and I've been talking about this for the last few years, is still communication services because of earnings growth, and also industrials, which has very strong earnings growth, double-digit earnings growth, second only to technology. So those are our top two favorite sectors, and we think that healthcare looks attractive here as well.
So what do you
in a
want to
market
do like this, such nervousness? What are some smart investment strategies beyond that investors should consider to best portfolio position their portfolios right now in terms of safety?
In terms of, I wouldn't move to safer assets because of geopolitical tensions. You know, this is part of investing, Maria. In the last few weeks, should remind investors that geopolitical risk always exists in the market, and this is just part of investing. You know, when we look back over the past 80 years with these types of geopolitical tensions, you know, we know that the average drawdown is about 4.5%. But if you make quick changes in your portfolio during times of extreme uncertainty, it hasn't fared well. In fact, if you're a long-term investor, you may want to start investing in buying on some of these dips and buying when everybody else is selling.
All right.
And I would stick with quality.
Yes, quality. Okay, Gina, great to talk with you. Thanks so much.
Thanks, Maria.
Gina Bolvin, stay with us. We'll be right back.